I once had a week where I went 9 for 12, averaged 1.6 R, and finished up just under $2,400. Friday night I felt untouchable. Monday morning I gave back half of it in 42 minutes, staring at a 5-minute chart that I'd studied for years like it was written in a foreign language. That's the part nobody warns you about. Your best week doesn't just boost your account, it threatens your identity. And if you don't know what's happening inside your head, the market will take the wheel while you swear you're in control. By the end of this, you'll understand why most traders collapse right after their best week, what invisible enemy is actually pulling your hands off the rules, and how to build a process that survives the emotional whiplash of winning. I'm talking to you because I was you. The enemy isn't the strategy, it's the way success turns into pressure, ego, and dopamine hunger, all at once. Here's the mechanism in plain language. A great week rewrites your expectations. Your brain quietly decides, this is the new normal. Then the market does what it always does. It changes pace, it changes rhythm, it pulls liquidity, it stretches, it chops. Markets punish patterns, not intentions. They don't care that you deserve a continuation week. They don't care that you feel on a roll. They punish the moment your behavior becomes predictable. After a strong week, predictable behavior shows up as you pressing when you shouldn't, skipping when you should, and adjusting risk based on emotion instead of plan. You start moving stops because you're protecting the high of being right. You cut winners because you're terrified of giving back. You hold losers because your best week made losing feel offensive. And you start overtrading because you're addicted to the feeling of being in sync. The real trap is the swing from pride to panic. You go from, I finally figured it out, to, I can't mess this up. That second sentence is poison. It turns every tick into a personal referendum. I lived in that failure loop for a long time. Months that turned into years where the exact same story repeated with different candles. I'd grind, break even, then have one clean week that made me think I'd crossed over, and right after that, I'd do the dumbest things with a straight face. I'd double risk on a mediocre setup because I wanted to keep the streak alive. I'd take a trade outside my window because I didn't want to miss the move. I'd exit early because the profit felt too big to lose. Then I'd stare at the chart after closing, watching price go exactly where I originally planned, and I'd feel both proud and ashamed at the same time. It got so predictable, I could feel it coming. Friday would end green, and instead of relief, I'd feel this tight buzzing under my ribs, like my brain was already rehearsing the fall. Sunday night, I'd open charts just to review, but really I was looking for proof that I deserved to win again. I'd plan 5 A-plus setups, and somehow on Monday I'd take 3 B trades before the first A-plus even triggered. The turning point wasn't a new indicator. It was a question that made me feel exposed. I was talking to a trader I respected, and I told him about my best week and the collapse that followed. He didn't ask about entries. He didn't ask about time frames. He just said, "Who are you trying to protect when you trade like that?" I laughed it off. Then I couldn't sleep, because the answer was obvious. I wasn't protecting my money. I was protecting the image of myself as someone who finally made it. Identity protection sounds abstract until you see it in real time. Your old self is comfortable being the almost trader, the one who's close but not quite consistent. That identity has no responsibility. It has no expectations. But the moment you have a great week, a new identity shows up, the consistent trader. And that identity is heavier. It means you have something to lose besides dollars. You have status in your own eyes. So your brain does what it's always done to keep you safe. It drags you back toward the old version of you, the one that can say, "See, I knew it wouldn't last," because that sentence feels familiar, and familiar feels safe. After my best week, I caught myself doing weird things that had nothing to do with charts. I'd check my phone more, hoping to see messages. I'd imagine telling someone my numbers. Then I'd feel embarrassed for even wanting that. That emotional swing is a tell. When you start trading for approval, even your own approval, you stop trading for clarity. The market doesn't need you to be confident. It needs you to be consistent. And consistency is an identity you build by repeating the boring action when your mind is begging for drama. Most people avoid this because it's uncomfortable. It's easier to believe you need a better setup than to admit you're scared of becoming the person who must perform every week. Success is a mirror, and mirrors don't lie. They show you what you still can't hold. Picture a Monday after a big week. You take one normal stop. 1 R. That should be fine, but your body disagrees. Your chest tightens, your jaw locks, your eyes get sharper, like you're hunting. You hear, "Get it back." Your cursor starts moving before you've even decided. So you take the next trade fast, too fast. You convince yourself it's the same setup, but you didn't wait for the confirmation you always wait for. It pulls against you, and you feel heat in your face. You widen the stop, just a little, because you can't stand the idea of being wrong twice. Then it tags the wider stop, and now you're down more than you planned. You swear you'll be disciplined on the next one, but your hands are already clicking. That's how a clean loss turns into a revenge spiral. One bad candle becomes a whole new personality. Now picture the opposite collapse, the one that comes after you've been winning. The chart feels slow, you feel restless, or you feel pressure, like the only way to keep your identity is to keep producing. You stare at a perfect retest and think, if I take this and it loses, it ruins the story. So you skip it. Then it works without you, and the regret hits like a punch. You chase the next entry because being left out feels worse than being wrong. Or you start taking tiny, quick trades that don't belong to your plan because small wins feel like keeping the streak alive. Sometimes it looks like confidence. You increase size because you earned it. You start taking setups in places you never trade because you think your read is special. You start believing your best week means you can bend the rules. That's when you get clipped. Not because the market hates you, but because your pattern has changed. You're no longer executing an edge. You're feeding a mood. Then there's the most brutal one. You know exactly what to do, and you can't do it. Price comes into your level. It's the same structure you traded all last week. But your body reacts like you're about to touch a hot stove. Your heart rate jumps. Your palms get slightly damp. You hover over the button and freeze. You hear, "Don't ruin the week." So you hesitate, and you miss the entry by 2 ticks. Then it moves, and you either chase it in the worst spot, or you sit there watching it hit your target without you, feeling sick because you were right and still lost. Execution has a cost, not in theory, in your nervous system. Now layer in dopamine and uncertainty fatigue. After a strong week, your brain has been rewarded over and over. That reward isn't just money, it's certainty. It's the feeling of control. Dopamine makes you crave repetition, and the market refuses to repeat on demand. So when variance shows up, it feels personal. Your mind gets tired faster because every decision carries more emotional weight. Bigger targets feel harder to hold because your brain is screaming for the reward now. Longer holds feel like sitting in a room with a smoke alarm that won't stop chirping. Uncertainty fatigue is sneaky. It doesn't shout, it nudges. It makes you impatient with your own process. You start craving a decision, any decision, just to stop the feeling of not knowing. That's why you take a mediocre entry and call it close enough. That's why you move a stop and call it giving it room. It's not analysis, it's relief shopping. You can see it in tiny behaviors. You check P&L more. You refresh your broker more. You stare at the last candle like it's a verdict. You stop reading the structure and start reading your feelings. And feelings always want closure. This is why a best week can be dangerous. It's not the profit, it's the shift in your internal baseline. You got used to being rewarded, and now you feel entitled to the same feeling again. Here's a simple logic example that makes this real, without pretending trading is a math puzzle. Let's say your strategy, when executed clean, has a 45% win rate. Your average win is 2R, and your average loss is 1R. Over 100 trades, you'd expect about 45 wins and 55 losses. That's 45 times 2R equals 90R, minus 55 times 1R equals 55R, net 35R. But that's theory. Execution reality is what you actually live. If after a great week you start cutting winners to 1.2R because you're scared, and you start letting losers slip to 1.3CR because you're stubborn, the math changes without you noticing. Now 45 wins at 1.2R is 54R, minus 55 losses at 1.3R is 71.5R. Net 17.5R. Same strategy, same market, different you. Markets punish patterns, not intentions. Your intention is, be disciplined. Your pattern is, protect my ego. So here's what changed for me. One constraint that forced the reset. Every day before I placed a trade, I wrote one sentence at the top of my journal, and I didn't allow myself to skip it. Today, I will measure myself by rule following, not by money. That exact sentence. Not a vibe, not a quote, a contract. Right under it, I wrote one prompt, and I answered it honestly before I opened a position. If I start breaking rules today, what feeling am I trying to escape? That question is a trapdoor. It drops you out of the fantasy and back into reality. Then I built a pre-trade habit that slowed my hand. Before every entry, I had to speak, quietly, as if I were explaining it to someone else, where the stop was, where the target was, and what would prove the idea wrong. If I couldn't say it cleanly, I didn't click. The point wasn't perfection, the point was interruption. I also changed how I treated Monday. I didn't try to continue the week. I treated Monday like a fresh start and a smaller test. For the first 2 trades of the week, I cut size by 1/3. That wasn't fear, it was strategy. It reduced the emotional stakes so I could focus on execution, not protection. After each trade, I did a review that didn't care about the outcome. I took a screenshot of the entry and the exit, then I gave myself an execution score from 1 to 10, based on whether I followed my rules. Then I wrote one sentence about what I actually did in the moment, not what I wanted to do, not what I meant to do, what I did. Then I tracked a metric that changed everything: rule break rate. How many trades this week violated my rules, even slightly? Not win rate, not profit, rule break rate. I also tracked missed trade count, because hesitation is just fear in a cleaner outfit. And here's the damage control that stopped the spiral. If I made 2 rule breaks in a row in a day, I was done, no debate. I stepped away for at least 20 minutes. No charts, no scrolling, just a reset. That cooling off rule saved me from myself more than any new strategy ever did. At first, it felt childish, like I was grounding myself. That's exactly what it was. I needed boundaries because my emotions were stronger than my logic in the moment. The market is the ocean. Your rules are the shoreline. Without shoreline, you don't swim. You drift until you drown. Remember that mentor question: who are you trying to protect? When you have a best week, you start protecting the new identity. You start trading to defend a story. I'm finally consistent. But the market doesn't pay for stories. It pays for execution. Here's what the shift looked like after I committed to that reset. The following weeks weren't fireworks. They were boring, and that boredom was the win. I stopped needing to prove anything on Monday. I started accepting that a best week is often followed by mean reversion in my own confidence, not just price. I started treating the first trade of the week like calibration, not a statement. I also stopped trying to sprint after winning. Before, after a great week, I'd show up on Monday like I had something to defend. Now, I protected recovery. I slept. I moved my body. I walked away from charts on the weekend. Not because that makes you pure, but because decision fatigue is real, and a tired mind pays for it in the smallest, most expensive mistakes. And I stopped taking the market personally. That sounds simple, but it's a skill, because every time you feel attacked by a red candle, you're no longer trading price. You're trading your self-image. When that revenge urge hits after a loss, you don't try to outmuscle it. You create friction. You follow the cooling off rule the moment you feel heat in your body. You let the urge pass like a wave instead of acting like it's an emergency. The market will still be there in 10 minutes. Your account will not be there if you keep clicking. The trade you want most is usually the one you should not take. When the win streak pressure hits, you practice humility by design. You keep size steady, or even slightly reduced, until your emotions catch up to your results. You remind yourself that boredom is not a signal to trade. Boredom is a signal that your brain wants dopamine. The chart doesn't owe you stimulation. Consistency is boring on purpose. When hesitation shows up, you stop pretending confidence is a feeling. Confidence is a behavior. It's clicking when your plan says click and accepting the outcome. If you freeze, you don't shame yourself. You record it as a missed trade and you count it. If you missed 3 A-plus setups this week, you weren't unlucky. You were protecting your identity. Once you can measure it, you can train it. Notice how all of this is less about the market and more about your relationship with uncertainty. That's uncertainty fatigue. After a great week, your brain is tired from being rewarded, and tired brains make short-term decisions. That's why you move stops. That's why you take profits early. That's why you chase. You're trying to end discomfort now. So you need a process that treats your brain like a variable, not a constant. Before the session, set a measurable boundary. Decide your max loss for the day in R, not dollars, and commit to it like a hard wall. For example, 2R and you're done. Not because 2R is magical, but because it prevents the emotional slide from becoming a full collapse. Then you write that sentence again. Today, I will measure myself by rule following, not by money. Under it, you answer the prompt honestly. If I start breaking rules today, what feeling am I trying to escape? When you write the feeling down, it has less power to drive your hand. During the session, do the one-breath explanation before you click. Speak it like you're teaching it. It slows you down enough to notice when you're chasing, and it catches the moment you're about to move a stop before you do it. After the session, do your review the same way, whether you won or lost. Take the screenshot, give your execution a 1 to 10 score, and write a single sentence about the pattern you saw in yourself. Then update your rule break rate and your missed trade count. Over the next month, those two numbers will tell you more about your future than your P&L will. If you want one extra layer, add an emotional score from 1 to 10 before you trade and after you trade. If you start at 8 and end at 3, you weren't trading the chart, you were trading your mood. You might be thinking, but what if I just had a best week because I finally got it? Maybe you did. But here's the brutal truth. If your process can't survive the emotional shock of winning, you didn't get consistent. You got lucky inside a window of good behavior. The promise of consistency is not that you'll always win. It's that you'll behave the same way no matter what the market gives you. That's what separates a clean operator from a hopeful clicker. I'm not saying you should be emotionless. I'm saying you should be honest. A best week makes you feel powerful, and power is intoxicating. It makes you want to expand risk, force more trades, and demand faster results. And that expansion is where the cracks show. So build your own ceiling, not to limit your growth, but to protect it. Growth that can't be held is just noise. When I finally accepted that, the next best week didn't feel like a trophy. It felt like a test. I didn't celebrate by pushing harder. I celebrated by repeating the same boring rules on Monday. I kept my window. I kept my size. I let the first loss be normal, and the week after that didn't collapse. It didn't soar either. It just continued. That continuation is what you're really chasing. Here's the challenge. For the next 30 to 50 trades, your job is not to make more money. Your job is to drive your rule break rate towards zero and track it like it's the only score that matters. Keep your risk fixed. Keep your max loss per day fixed. Use the cooling off rule the first time you feel heat in your body, and every single day, write that sentence before you trade. If you do that, something changes quietly. Your identity shifts from "I'm trying to be consistent" to "I am someone who follows a process." That identity is stable. It doesn't need a best week to feel real. It doesn't collapse after one. The market will keep changing. It will keep pulling you into old patterns. But you don't need to win every day. You need to stop being predictable to your own impulses. Because your best week isn't the finish line. It's the moment the real work begins. Be the trader who can handle success without flinching.